Welcome to my GTA Market Pulse October video update. My name is Sam Najjar and I'm a real estate broker with Royal LePage. Thank you for tuning in. Well, the numbers to the end of September are in for the Greater Toronto area, so let's take a look. You can see here we did just over 11,000 sales in September, which by the way was the best month we've had this year in terms of total sales and is the best September on record ever. At the same time, we're seeing the supply of listings up just a little bit, but you can see from our months of inventory numbers, which have been hovering around the 1.5 months mark over the last few months, that we are still in seller market territory. We're getting multiple offers on lots of properties with, of course, prices going up as well. Now look at this chart. If we compare 2019 total sales for September to 2020, we're up by 41.6%. This is a huge increase. So it's obvious we're playing catch up from the second quarter when things slowed down because of COVID. What about prices? As you can see, we're up just over 14% year over year, which is a very, very healthy increase. When we look at total sales for 2020 versus 2019 year to date, we are slightly over 68,000 last year, and we're just over 69,000 this year. In other words, our total sales are up by 1.2%. When we break down the numbers by quarters, we have a better story. Take a look at this chart. Generally, the second quarter is the busiest quarter of the year, with April, May, June being prime real estate activity. We did almost 20,000 sales in the first quarter and just over 16,000 sales in the second quarter, which was the worst quarter of the year so far. But we did almost 33,000 sales in the third quarter, which was up by 102% over the second quarter. Average prices were up by 9.2% over the second quarter as well. So despite COVID, the prevailing economic uncertainty and the higher than normal unemployment numbers, our GTA market is doing extremely well and is probably one of the best markets we have right now in Canada. Having said that, we're starting to see some changes in the condo market. If we go back a year ago, sales of condo apartments were leading the pack with hardly any inventory at all. Condos listed had multiple offers and sold in no time. What's starting to happen now, especially in the 416 and Toronto areas, is that we're starting to see inventory creep up of condos. Here's why. Many people don't want to be in the high density spaces with no social distancing because of COVID. They don't want to be in a gym in a condo building, and they don't want to be in an elevator and so on. Not only that, a lot of people are now working virtually from home. They're probably saying to themselves, I need a bigger space because I'm home all the time, working virtually, or I can sell my condo and I can move to an area outside of Toronto, maybe an hour and a half away to a bigger house because I frankly don't need to be in the office as much. This is a trend that's starting to take place and we're going to see more of this. The rental market is also being affected as a result of all of this and the rising unemployment numbers. A lot of condo units that were previously used for Airbnb as short-term rentals have been converted to long-term rentals because there's no tourism and owners need the money. This is in addition to the new construction projects that are happening. All of this is contributing to lower rental prices and lower sales, especially in the city's core. What I think is going to happen over the next quarter is we're going to see more inventory of condos hit the market as people continue to want to get out from off condos and investors want to offload their condo investments due to falling values. But the increased supply, the decreased demand, and lower rents and sales are likely short-lived effects from the pandemic. However, with low-rise properties, the prices and the sales are expected to continue to stay strong. And I'm talking about the detached semis and the low-rise townhomes. We're now officially in the second wave of COVID. And are people going to say, let's wait to see what happens to the market? Likely not. Back in March when we were shut down, we were all panicked. We didn't know how to handle COVID. But we have things relatively figured out now. We know how to sell homes safely using virtual tours and taking the precautionary measures recommended by the public health guidelines, like getting forms filled out for contact tracing and wearing and providing personal protective equipment. And buyers and sellers are also more comfortable. Safety will still be important, but it should not be a deterrent to real estate activity. Lastly, an initiative that's in the works that I want to keep you in the loop on as it's important to our GTA market and our real estate industry as a whole is the recommendation put forward by the Ontario Real Estate Association to the government to introduce policies such as a land transfer tax holiday, maybe for 6 months, an increased first-time home buyer credit from $4,000 to $6,000, and a home renovation credit like the one implemented by the federal government in 2009, among other policies. The housing sector has always been important to Ontario and to Canada as a whole, and it's saved our economy during the last downturn and can once again stimulate our economy and get Ontarians back to work. These policies should make homes more affordable, should increase consumers' confidence in spending, and will create spin-off jobs and aid with the economic rebound. That's all I have for now. Thanks for tuning in again. If you found this information helpful and valuable, please like it and share it, and please subscribe to my YouTube channel. Until next time, stay safe, stay healthy, and stay in touch. Bye for now.